Hello, I'm Greg Hunter. Thank you for joining us on USAWatchdog.com. Today, my guest is the president and CEO of Bullion Management Group. His name is Nick Barisheff. He's been in the investment business a long time, 30 years, and he has a new book coming out titled $10,000 Gold. Mr. Barisheff, thank you for joining us today.
It's my pleasure, Craig.
Well, let's talk about this prediction for $10,000 gold. There's, I guess, two basic questions. How do we get there, and when?
Well, when I started the companies, I was reluctant to do prediction, so this changed my mind just last year. And what changed my mind was the U.S. debt ceiling debate. And from that debate, it became clear that there was going to be no solution. The super committee didn't come up with a solution. And the debt was already unsustainable, unrepayable, and it was going to accelerate. And if you plot a chart of the price of gold against the U.S. debt is almost like perfect correlation. And what we've had over, since 2002 roughly, is not so much that the gold price is rising, but that the currencies are all declining. Not just the U.S. dollars, they're all declining. And for you to understand why we're going to reach $10,000 gold, you have to understand that gold is money, number one. And number two, that it's not so much the gold price rising as it is the currency is declining. And when you look at, the government action, around the world, that governments and central banks everywhere are just creating more debt, more currency, and as they do, the gold price will rise relative to the currencies.
Well, you invest in not just gold, but you invest in silver and in platinum. You have something like $550 million worth of physical gold and silver and platinum vaulted. I know your company also delivers gold and silver and platinum to people who would like to have it. I watched one of your interviews recently on one of the business channels, which will remain nameless, and the people are pretty incredulous. I mean, they're almost as if they're scoffing at your prediction. Like one of them said, last week or so, when it gets to 10,000, we'll be calling you. Well, are you getting a lot of pushback from mainstream media with a prediction like that?
There's been pushback ever, since I started this, and it's been very surprising, as you get into this, to get this level of kind of negative bias and prejudice and so on. But when you come down to it, it's really normal. For most people that are in business and alive today, they've only experienced one cycle, and that cycle has been a booming equity market and a booming bond market. And it hasn't, it's been, if you want to call it a bear market in gold. But I'm a little bit older, and I'm lucky enough, I guess, from this point of view, to have lived through several cycles. So if you go back to the previous cycle, 68 to 82, the opposite was true. But it then requires you to be quite old to know that cycle and this cycle. And for example, from 68 to 82, the Dow was essentially flat. And if you were an investor in 1968, you didn't break even on an official inflation basis till 1995. So basically, you probably didn't live that long from 68 to where you saw a real break-even in inflation. So as a result, if your whole mindset and your whole view of the investment world is being experienced one way, it's very hard for people to change. There's normalcy bias, there's complacency, all these things come into play. And, it doesn't matter whether it's an individual, an institution, or the media. So we're in that change now. No one wanted to buy the NASDAQ when it started its bull market in 1982, and very few people wanted to buy it 10 years later in 1992. Most of the investors came into the NASDAQ in the late 90s, when it was already too late. in terms of the numbers, this isn't going to be a normal bull market because gold is money, and there's no limit to how far currencies will decline. So, as an example, where right now people may be incredulous at $10,000 an ounce gold, but the most well-known hyperinflation in Germany, gold went from 75 marks an ounce in 1921 to 23 trillion marks an ounce in 1923. So 10,000, if we get into a hyperinflation, will be a conservative estimate. And there's many people, I think you've interviewed some of them, you know the opinions, that there'll be no stopping getting into a hyperinflation eventually.
Well, let's see. Gold is around, what, $1,600 an ounce, in that trading range of around $1,600 an ounce, and you're calling for $10,000 gold. Well, then, according to you, this is early.
Well, it is early, and at 1,600, we're first of all in a seasonal bottom, which is typically in August. So even for this year, it's a reasonable prospect to expect gold to get close to or surpass its previous high of 1,900 by year end. That's a reasonable prospect. But to put this into perspective, when we go back a few years, people were gasping at the budget deficit of 200 billion. Now it's 1.5 trillion, and is going to be more than 1.5 trillion as far as the eye can see. And it's likely going to accelerate. We've got several major trends that are going to cause it to accelerate. One is that the unemployment problem is systemic. It's not cyclical. The jobs have been outsourced. They're gone. They're not coming back. Secondly, we've got peak oil, and by peak oil I mean production, not reserves. So we're at a point where as much oil is being produced as fast as it can, and many of the major oil fields are in decline. So there's a lot of discussion on that. And as you reach peak oil and supply drops, you're going to have an increase in price. An increase in price in oil is highly inflationary to everything there is, from transportation, production, farming, everything. And when you have that, that's going to be negative from a point of view of GDP, government revenues, and so on. So that's a headwind that's probably irreversible in the immediate future. Yes, and then there's the third thing. And the third thing is the aging baby boomers. The baby boomers drove the markets, whether they're financial markets, real estate markets, the economies, in the past 20, 30 years. They were at their peak spending patterns. And baby boomers are now starting to retire and are going to be withdrawing, cutting back expenditures, divesting themselves of investments, and requiring to withdraw from the system, Medicare, Social Security, and so on. An absolute reversal of the last 20, 30 years. Japan is happening sooner and is ahead of that curve from this issue of aging baby boomers. And you're going to have a situation where there's going to be fewer workers sustaining more and more retirees. So the government deficits are going to skyrocket for those three reasons. And they're already bad enough as is. The U.S., in terms of cash liabilities, is 15 trillion, but when you add everything else in, they're closer to 200 trillion. So that's clearly not repayable. That's well in excess of $1 million per taxpayer right now. So that's clearly not going to get paid.
So to sum that up, Mr. Barisheff, you were facing the perfect storm of a terrible economy, and I guess also the perfect, beautiful, sunny day for physical assets, gold, silver, platinum, farmland, diamonds, artwork, whatever. Is that right?
Well, that's right, but see, the reason we chose gold, silver, and platinum in our first fund is those three metals have lengthy histories of being money. everybody knows about gold and silver being money, but platinum was money for over 300 years in Russia because platinum has huge reserves of platinum. So those metals have all functioned as money in the past and successfully have functioned as money, whereas there has never been a fiat currency in all of history that didn't end in hyperinflation and then a complete collapse. Not one in all of history.
So you're saying the dollar, which is also a fiat currency, is doomed. So the question is, when?
Well, that's the hard part, but I think that $10,000 gold is a real possibility in plus or minus 5 years, in my opinion. But that isn't the top, and I don't want to predict the top because the top and what gold will represent in fiat currency could sound as ridiculous as saying gold was 23 trillion in German marks in 1923. People have a hard time, accepting $10,000 gold, so there's no point, talking about that. But if it hits 10,000, that is not going to be the end. That's going to potentially be the start of a hyperinflation in the major sense.
A few years back, a major market guy did some math on this, and he was talking, well, if you count everything and you back the dollar and all, you do everything, you back the dollar 100%, you'd probably need $39,000 gold. Are we per ounce? Are you talking that might happen? $39,000 gold?
Of course, and you've even got people like Jim Rickards, who he analyzed what
he's the one that said it.
Yeah, the gold price could be in, M1, M2, M3, different methods of calculating. But that's only taking the US M1, M2, and 3. The real problem right now is that never before in history do we have a fiat global reserve currency. So when Germany had its hyperinflation, that was limited to Germany. When Zimbabwe had its hyperinflation, that was Zimbabwe's problem. But if this happens, it's going to be a global problem. And that's never happened before.
Oh, boy, I just had a big uh-oh moment. You're saying that the hyperinflation isn't just going to be for America. Everybody's going to take a hit on the planet.
That's right, because in effect, if you take the U.S. dollar as the de facto reserve currency, all the other currencies are essentially derivatives of the U.S. dollar. So as the U.S. dollar goes, they go. Now, the U.S. dollar is likely going to be the last currency to fail because as the other currencies, whether it's the Japanese yen, the euro, the pound, as they experience these problems, that'll happen there first. And the problem will be that in the beginning, there will be a flight to the perceived safety of U.S. dollars, which has been happening recently because of the euro crisis. But then the realization is going to come that the U.S. dollar is no better than what I've had my flight to. And more people are realizing that the only place that they can flee to is precious metals.
So you're initially saying could see a spike in the dollar for 5 months, 3 months?
Sure.
Or 3 days?
Right. So the opportunity is now, while the metals are still, people, there's, media articles and so on talking about that gold is at a top and so on. That's a ridiculous assumption.
Would you say gold is cheap?
That's right, because there's very little of it owned. There's 250 trillion of global financial assets. Now, this is just paper assets, not including real estate or anything like that. Just, bonds, mortgages, treasury bills, etc. In contrast to that, and I'm using very round numbers, so it's understandable. But in contrast to that, let's say there's 3 trillion of above ground gold. That's it. Half of that above ground gold, 1.5 trillion approximately, is held by the central banks. Central banks have become net buyers since 2009. So that's not available for sale. The other 1.5 trillion is privately owned. but the majority of the privately owned gold is held by the world's wealthiest families. They don't tend to sell it at any price. That's the core of their holdings. That's what they've always held, and they're not going to sell it. So you have only mine supply, which is 2,500 tons a year coming on stream, and some of that available gold to buy. So the problem becomes what happens when the institutions, and they're slowly starting to come around to this, the institutions that are in the 250 trillion decide to allocate even a small amount, like 5%. Well, the only adjusting factor, if you try and allocate 5% of 250 trillion to the very short supply of gold, is going to be the price. So without any issue of hyperinflation and currency decline, we've got a situation where just the demand fundamentals from the institution could cause it to skyrocket.
Where gold is right now, that's a deal.
That's a deal.
Because it's cheap.
Yeah. Because
silver, I guess silver is uberly cheap then.
Yeah, silver and platinum is even cheaper because it should be $200 an ounce more than gold, and right now it's some aberration where it's $200 less than gold. So you got a $400 spread in platinum just to be at the norm.
All right. Nick Barisheff, you are the CEO of Bullion Management Group. You've got more than $500 million in physical gold, silver, and platinum. Thank you very much for joining us here on USAWatchdog.com.